Today I sat down with John Baule, who is the founder of FutureView Systems. FutureView Systems is an incredible solution and tool. They have their own foundation, I believe it's called, where they have an analytics dashboard that gives you access to understanding your true finances so you can make strategic decisions. Now, John has extensive history in the space, growing up in a time where we actually talk about the fact that email was just coming out. So really, really interesting to hear from a real seasoned veteran as to what the landscape looks like and what you need to look like, or look for rather, when it is building a business from a financial standpoint. I hope, like always, you get the value out of this that I did in sitting down with John. Welcome to Successful Scales, the show where I talk to world-class professionals on what it takes to scale successful businesses. I dive deep asking questions to people who are running unicorn businesses, to raising funds, to buying businesses, mergers and acquisitions, IP and patent law, what is to manage performance management. I mean, the list goes on. The idea really is, how do I create knowledge and learning for you guys listening in? And of course, myself, getting the floor with people who I, in many cases, would never dream to share a room with. Before we jump into the episode, I've got to give a special thank you to our sponsors. Firstly, over at Global Wide Advisors, a leading digital consumer products investment bank focused on optimizing the sales process. An incredible team, always happy to pick up the phone and educate you or anyone about the sales process and what you should really consider, and can obviously help take you to market or even acquire businesses. I ring them for just about everything these days. Us over at Multiply Me, we are the end-to-end executive search and HR function into the Philippines, helping find better talent and onboarding them effectively. And last but not least, Escala, our management consultancy focused on process improvement, where we help build better systems for your business. That's all the ads you're going to get from me, ladies and gentlemen. The rest is all about learning. I hope you really enjoy and get as much out of these sessions as I do, sitting face-to-face with some of the world-renowned leaders in their respective fields, asking them the tough questions that they're not often asked. John, welcome to an episode of Successful Scales, mate. Thank you so much for taking the time to sit down with me today.
My pleasure. Great to be here.
It's really exciting. The fact that we've had such constructive and, high-level conversations on, what's been a beyond impressive career that you've had to date and everything that you and the team are working towards. I'm really excited to have you on and to be able to really pick your brain and ask you some of the tough questions. But before we get into all of that, and before we really dive into what you're up to today, I'd love you to walk me through. And I know it's extensive. You didn't start your career yesterday, but I think it's a really fascinating journey. And I'd just love you to, in your words, explain to those listening a little bit about you and what you've done.
Sure. Be happy to. And like you said, it's extensive in years anyway, if not, and a lot of experiences. You pick up a lot of things along the way. So I started in public accounting after college. I went to William & Mary in Virginia, and I became an accounting major because it seemed like that was a good way to get a job, and employment was a big objective at the time for education, much more than pure self-actualization at that point. And I spent 4 years with what was called Peat Marwick at the time. Now it's Peat Marwick Mitchell, which is now KPMG. Back when it used to be the Big Eight, and you wore a tie and a white shirt to work every day. And I learned a lot of very basic skills. A lot of the initial learning you do as an auditor is not particularly enjoyable, but you look back and you say, hey, this actually turns out to have been pretty useful. So I learned a lot of the detailed things, how to pick the right tie, and hopefully, and how to make sure things tied, and some good fundamentals. And I did that for about 4 years, and then decided wanted to do something a little different, and moved to New York and joined Bristol Myers Squibb. And I joined their corporate internal audit group. So it was a different focus. Instead of looking at, making sure the books were right as of December 31st, an internal auditor looks at the processes to say, how do we make sure that, the numbers and the reporting is correct all the time? And what are some of the processes? And that actually turned out to be a really good experience for me. Again, I can't say I love being an auditor, but I learned a lot from it. And during that time, this was a big time this was back in the very early, late 80s, early 90s. I came across, everybody has those formative books that change their life, and they have to hit you at the right age, because now so many books, you feel like you've read it before, but if you get you at the right time. And I remember the two that really struck me were a book called Re-Engineering by a guy named Michael Hammer. And man, it was just like a completely different way of looking at processes. And at the same time, there was a guy named Tom Peters who wrote a book called, he wrote In Search of Excellence, but the one that really struck me was called Thriving on Chaos. And it was kind of an artsy approach to business. So I'm reading this thing on re-engineering processes, and I'm reading this artsy approach to business, and I'm putting those together. And so fast forward with Bristol, I ended up getting assigned to be to start working with their international operations. And long story on how that happened, and so I started going out to the Philippines, and we had a pretty good sized business in the Philippines, but with some deficiencies in internal controls, if you will. And I know you've worked a lot in the Philippines. Sometimes you can have a lot of check boxes and papers being signed and initials going places, but the overall structure doesn't necessarily work. So it seems like 10 people signed this, but yet there's enough control, there's enough holes in it that you could drive a truck through the gaps. And so here I am, fresh with my re-engineering read and my and looking to do something different. And I put together this project to basically reorganize all the processes and controls for this business in the Philippines. And fortunately, it was also kind of a highly visible project because it had been a challenge for management. And we did that, and went very, very well. And also, sort of in my mind, I really developed, because I work very closely with the people in the Philippines business. I developed a real affinity for the culture and the people, and I became a good candidate to be the first finance director there. So I went out to the Philippines, and I spent a little over 2 years as the finance director. So this was kind of a big career move for me, because I think I had never had anybody report to me other than little projects. And then all of a sudden all of a sudden I had 50 people reporting to me and a 650 person business. And it was pretty exciting. And I did that and did some things that date me a little bit. Like I introduced email to our Asia business for the first time.
Yeah,
which really,
I remember talking about that last time with you. It was amazing time to be going through all of this. And, like we spoke a lot about our joint affinity for the Philippines, but yeah, what an experience. I mean, yeah, sorry, I've derailed you here, but exciting.
It's totally, it was huge. And, and you were mentioning it to me earlier, like doing some of the things like 360 reviews and things like that. And what I kind of learned, here I am coming into kind of a management role, but in a different culture. And I had to learn how to take things that were sort of, Bristol Myers was a very US centric company at the time, and to take processes and procedures that were somewhat US centric and adapt them or discard them in some cases from the Philippines. Because, for example, the entire review process comes across very different in a culture like the Philippines, in a country like the Philippines, than it does in the US, and so adapting that turned out to be a good experience in learning flexibility. And so I attribute that. So I moved on from there to become the head of finance for our Asia Pacific region, in Hong Kong, and spent 4 years in Hong Kong, which was notable. I had about 15 countries that we had to pull together with financials and hold budget meetings, and really that's where I first came to appreciate how much a budget needed to be about decisions, and how much a budget could change over the course of the year. Because a lot of companies, I know you see this, companies start with a budget, and then it's like the old Mike Tyson quote, everybody has a plan until the first time they get punched in the mouth, right? And so I learned that monthly forecasting, to be able to keep an ongoing view of what the business looked like, was critical. Because this was the late 90s in Asia. We went through things like the huge Asia Pacific currency crisis, where all the currencies literally, devalued by 50% or more. And boy, that changes everything when you've got a supply chain that's in dollars, and all of a sudden your local currencies are devaluing. And you have to be able to every month the picture is different. And yet you want to make good decisions, and you want to have the right conversations. And so I became kind of an advocate. So a lot of the methodologies I learned for forecasting and budgeting and thinking about how to relate the financials to the decisions of a business came out of my Bristol Myers experience. And I got the good fortune to work with some really talented financial people who really thought about things that way. So it was helpful. So anyway, that gets you only to almost the turn of the century. I don't know how.
Well, I mean, look, I'll say already, it's becoming very, very apparent to me just how vast your experience is. And also, forget the time. I mean, the time I think is really interesting in itself, but working with such huge multinationals, establishing functions and reporting mechanics for the first time, dealing with cross culture. I mean, these are things that are particularly relevant today in the digital age, where, we're sitting here halfway across the world from one another. I feel like I've known you my whole life, and we sit here and we can have a conversation like this. And so the whole world has to really adapt into what dispersed teams look like and how that functions. And I think that the complexities that come into working remotely and having, dispersed teams, and having, you talk about budgets, right? Like, it's hard enough to get all the senior leadership team in a room together in a physical location, let alone when that's done globally and all of a sudden you're on different time zones, and then, you don't have an effective reporting cadence or a mechanic or anything that relates to that. So, I mean, at least from my perspective, like, everything that you've worked on and historically and what you're working towards, and I want to get into that in a minute rather, is very relevant to attacking a market that, I would say that while you've gone through this whole experience, and most huge multinationals and corporates go through this evolution, most of the small to medium entities, they never even get to that position where they're mature enough to establish these processes and protocols and these deliveries. And as a result, they probably never even mature to live beyond 3, 4, 5 years, because they haven't got their shit together. So
absolutely killer point.
So I'd love to hear, I'd love you to tell me a little bit, let's fast forward a few years here, and I'd love to hear, or I'd love you to share a little bit more about what you're working on today. Because, when we connected the first time and I was sort of learning a little bit about the business and the model, I'd been down the rabbit hole of trying to get financial control of our business. And we had internally, accounts payable, accounts receivable, we had a financial controller, and we have all these resources internally. And while they do a really good job, it's not strategic. It's very much about the lag metrics of, well, what did we achieve last month and how does that look? And we do some baseline budgeting and all these things, which I'd say we're probably more established than most businesses a year and a half, 2 years in. But the reality is we're still so far off the mark. So on that note, I mean, talk me through a little bit about where you're at today and what you're up to.
Well, let me that's a great segue, because what you're saying is that, and I saw this when I made the jump from Bristol Myers Squibb into progressively smaller, more entrepreneurial companies. When I first came into the idea of being an entrepreneur, and I'd hear people say, well, I just could never work for a big company because they make decisions so slow and they're so stodgy. And I came to realize that it actually was the opposite. A lot of times when you see smaller companies, and I've worked with now a lot of smaller companies, big companies can make decisions quite quickly because they have a very well-defined structure, kind of like the military. When the military knows what it wants to do, nobody moves faster than the military. Smaller companies, on the other hand, especially the ones that you and I are kind of talking about, they start with a founder, and gradually power and decision-making authority disperses through organization. But during that growth period, during that maturing period, man, it can be slow to get anything, because I know you've seen those situations where when are we going to get a hold of Ron, who's got to make the final decision on this? Because and now we went through the whole process and we built a deck to support the analytical decision, but Ron just doesn't feel good about it, or the CEO, the founder, it intrinsically is not what he wants to do. So that structure is hard for smaller companies to acquire, and it takes a lot of times years to do it. And that's really, on the finance side, what you find is that companies tend to operate with suboptimal data for a long time. I mean, think about the typical company that you founded company. So this, you start out as a founder and you're doing it all yourself, and you start to put the numbers together on your own spreadsheet, and you try to keep it all going, and all of a sudden you got invoices coming in and bills to pay, and it gets more and more complicated. And so you bring in your first bookkeeper, right? And the bookkeeper gets QuickBooks maybe and starts to pay the bills for you and does those kind of things. And that's okay for a little while. It takes some of the burden off you, and you develop a little bit of trust that something can get paid without you having to be actively involved in it, but you're still close to it. Then you go and you say, but now I've gotten to a point, maybe I need to have a raise bank debt or investment or something like that. I need financial statements. And so you build financial statement. You go out and you say, I need someone who understands, in the US, it's US GAAP. So you go out and you hire your first controller. And the controller comes in and they organize everything, and they put together these beautiful GAAP financial statements where your revenue is properly recognized and your expenses are appropriately allocated, and you get these financial statements, and they're usually quite a bit of time after the end of the month, and you realize they don't really tell you what you want to see, or by the time you get them, you've already moved on. You're already thinking about next month and that kind of thing, and what you find is, and this is, those controllers, there's a certain mindset. And this is one thing companies build this way. They think about, finance is not one thing. Finance has you're getting the data, which I would call controller functions, everything sort of from the present backwards, and then modeling the business out forward and looking at those things that are not accounting metrics. For example, if you're looking at customers, you're very interested maybe in cohort data, or you're very interested in, how many views you have, or how many eyeballs, how many people saw. We just talked earlier about how many people look at a site. Those are not accounting metrics. Those are analytical metrics that you have to have. You go to your classic controller and you say, well, tell me about this, or how to, if you say, tell me how much money I spent on this in the last 6 months, no problem. That's easy. But if you say, gee, I'd really like to know, if I hired 3 salespeople for every quarter for the next 3 quarters, and they took 6 months to ramp up, and they each sold this much in bookings, and that bookings will be recognized over the next 12 months, what would that look like? And their head explodes. That's just not the way. That's filled with ambiguity and imprecision. And so they move, you need that person who can come in and think that way. It's kind of a different mindset. So
I'd say as well, like going through this journey, for most of the people who are geared towards being quite entrepreneurial, unless they have extensive background in that specific function, it's not going to be their bread and butter, and it's also not going to be the thing that excites them the most. And it's only now that I'm sitting, let's say I'm halfway peeking through the lens. So I'm now going through this process of fractional CFO and experiencing like that aha moment of understanding, what does our future state look like? What are the true cost drivers of the business broken down to each of the specific functions? And what if we dialed in aspects of it? What would happen if we invested X money in marketing? And as a result, so I think like the typical clients in the SME space, particularly founders trying to build businesses, they kind of close their eyes and just drive forward and think, how can I just make more sales rather than optimize my output? And, with the controller that you outlined before, it's lag metrics. It's things where I can't really do anything to impact my future state. Like what does it look like 3 years from now? What's the valuation of the business if, like you said, you could consistently bring in 10 new clients a week over the course of the next 3 years and have 90% retention rate? Like, what does that actually look like? Those are the moments where you sit there and say, shit, I'm really onto something now.
Yeah, no, it's one of the two things to think about there. One is, I don't mean when I say that, the controllers tend to look at the business in a certain way, I don't mean to in any way devalue that, because accounting is sort of like electricity, right? If it works perfectly and you're accounting and your books are closing every month, then nobody thinks about you. And if all of a sudden it doesn't happen, it's like the electricity going off. It's all you think about because nothing else can work. So, finance is a cumulative thing. And that's really why that's really what's created the need for FutureView. Is when you look at companies, they almost always, from a starting point, they build their finance functions sequentially. So they build through the controller, and then they think about the metrics, and then they finally get to the point where just what you said there, it's about the conversation that you're trying to have as a business. Really, it's not about the numbers, it's about the conversation. What decisions am I going to make that will make me create more or deliver more in the future? And so that sequential build, though, doesn't really work. It's just like you're building if you were building a house, you wouldn't start day one by calling in your plumber and your electrician and having them wire and put plumbing in, because you don't know where you want the different things to be. And then later on, when you build the house, because the house gets built anyway, you're building the company, like you said, an entrepreneur is moving ahead and moving forward. Now you find out, gee, the only place I can have this bathroom is right in the middle of the kitchen. Well, that's not the way I wanted it. Well, the reason you're in that position is because the architecture wasn't done ahead of the basic framing. And that's kind of what I think we do with companies. And that's one of the things that there's a couple of reasons for that, but that's one of the things FutureView tries to address is, how do we A, re-architect you, but B, think about how much effort you would have saved and how many more good decisions you would have made if you had designed the way the house was supposed to look up front before you started calling in the electricians and the plumbers and having to replumb things and re-electrify, do things over again.
And I think, like, to that point too, looking at where we're at, so we're less than 2 years into the business, it's going to take literally months, realistically, to get ourselves into a position where we have sort of two businesses running in parallel with different types of revenue streams. One's project-based, one's retainer, one's a mixture of both. It's messy. We have shared resources across both businesses. And so, if, to use your example of building a house, like, I would never start another company moving forward without having that infrastructure built out and having, if we get big enough, we'll bring someone in-house, but realistically, it'd be a long time before you'd move away from a fractional CFO or someone who's going to lay that foundation and then also give us the value proposition of what can we actually do to move the needle. And so, just because it's so fresh in my mind because I'm going through this process, and each time we have these conversations, it makes me think even further. I mean, you haven't gotten to it yet, but I'm particularly excited about the technology that you're working on and what that looks like, because again, like, it's one thing having the information, which everyone has, right? You using QuickBooks or Xero, the information's there, money's going in, money's coming out, like that's there as a baseline. Maybe it's not structured in the right way, but how do you then take that to a level where, for the layman, myself, how do you actually then quantify that and put it in a way that's very easily digestible? And I think, with what you're doing at FutureView, and Foundation, if I'm not mistaken, is the platform. That's really the heavy lifting now.
Well, that's it. So what we do is if I think about that maturity curve that a finance function goes through, I've lived that maturity curve, through a number of companies, as you know, gone through a lot of small companies that have taken all the way through to an IPO at one point. But I realized in the first smaller company that I took that journey through, it probably took me 18 months to do it. As I moved from company to company, we got faster and faster. So what I realized is, and then as I talked to other people about CFO opportunities and things like that, every CEO was asking the same question. Well, here's, I say, do you have a problem with like too many spreadsheets that don't agree? Oh yeah. When you have your management meetings, do you find that, your salespeople are presenting different numbers than your finance people? Or, oh yeah, all the time, all the same pain points. So I realized I could immediately say, I know why you're having this pain point, and we can address that. So we got really quick at this, and then I said, okay, how do we get to the how do we take that and make it kind of a scalable structure? And so what we've done is we created a platform. We actually have two products, and one builds on the other. But the first product we created was what we call our FutureView platform. And what that does is it really encapsulates a complete forecasting and budgeting methodology, but with a key ingredient of that being that we directly integrate with whatever your sources of truth are, especially your general ledger system. Because one of the biggest issues you have are with companies is, for me to take that accounting data and do something with it, I've got to pull it out of that, whatever the general ledger system, whether it be QuickBooks or NetSuite or whatever, and I've got to get it into a usable format. For 90% of finance functions, that usable tool that is Microsoft Excel. And I love Excel, but Excel is a nightmare when it comes to managing huge amounts of data on an ongoing repeat basis. You end up with all the errors, and I'm sure you found those times where someone hard-coded something into the spreadsheet, and it and later on you pay for it when the spreadsheet comes out with the wrong answer, right?
Massively so. And I think like you're touching on so many points that most small to medium enterprise businesses deal with on the day-to-day. Like, I would love to run a survey with all of our clients that we work with and just see like, how many of you guys are actually budgeting for your future state investment? How many of you have a regular meeting once a month or even once a quarter? How many of you actually know, what is really moving the needle inside of the business, from a true financial standpoint.
Right.
And, if I had to guess, most of them wouldn't really have a real grasp on what it looks like. And I think, what happens to a lot of companies, particularly, there's a huge, I think we spoke about it briefly maybe a month ago, how there's a huge push in the e-commerce space right now where a lot of Amazon businesses are being snapped up, FBA businesses are being snapped up by venture capital trying to aggregate these businesses together.
Yeah.
And so what tends to happen is that, you're paid a multiple on EBITDA, and all of these businesses who haven't been well oiled and organized running for 3, 4, 5 years have these delusions of grandeur that really they have this huge business, it's doing 20 million, 30, 50 million in revenue for businesses of that size looking to exit in the current market, where in reality, like their EBITDA is at $1 million, $2 million. Right. And it's because they haven't got true visibility into what's happening. So, again, this is the journey that I'm also going on. True. Like I've never been more acutely aware that revenue is an absolute vanity metric. And anyone who sits and focuses on, we're doing $1 million a month and $2 million a month and $5 million a month. Well, what's either the future vision and how are you going to turn that into a profitable business? Or, where is profitability now? Are you profitable? Like, is this a cash flow business that is for life, for lifestyle? Or is there an objective to exit? And I think what you're doing with FutureView and with Foundation, it is an absolute necessity for anyone trying to run a business at any level to be able to get visibility and control of making relevant decisions. Because, we could sit here all day, John, and talk marketing, which is one of my favorite topics to talk about, right? But, all the campaigns that we're running and everything that's going on, like what's the true cost? Like what's the true cost on the back end for how many operational people, even outside of the marketing team, when we're looking to recruit people, like what all the software, all the technology that they're leveraging, and then the levels of communication and the time wastage in areas like what we found is that the cost of delivery bloats very quickly as you scale. And if you don't have really tight visibility and controls, it really, it can go south pretty quickly.
Absolutely. You know what you said in terms of how you start as a business. I would say a lot of people, and I know you do this as a founder, you do a lot of these things kind of intuitively. You just don't always put them into process, right? So one of the things that we do with a business early on is we help them design what we call an analytical framework. What are those key things that you really look at? Like you said, revenue is a vanity metric. Well, what is important then? And a lot of times what is important starts with an external market thing. How many potential customers are there for this thing that I'm offering? And then how many bookings did I get? And how do I think about that? And how many salespeople, or how much effort? What is my customer acquisition cost? And then with a lot of businesses that are in the subscription space, it's as much about what is the lifetime value of one of those customers, So, that analytical framework, you almost have to start with that. And if you do that, if you have that analytical framework, it improves the quality, because then if I define that well, and that's what we do, we'll sit down and we'll say, look, what are the 8 or 10 metrics that really matter to you? You're a consulting firm, it's utilization, it's average billing rate, it's whatever the business, you have those 6 to 8 things that really frame how well you're doing. It can't be one, because then you get weird things like, oh, this is really, utilization is 90%. Well, 90%, but at a low rate, or 90% at a high rate, or, you got to have enough metrics to frame all the different angles of things. And I always think it's kind of like a sporting event. I need to build a framework. If I use too many sports examples, but if I'm a football coach, well, it matters how many yards I get passing versus how many yards I get rushing. It matters how many, but all these things, you got to have the right combination of metrics to really figure out the endpoint, which is, did I win or did I lose? And ultimately, it's how many points do I score relative to how many teams, whether I'd rather score 30 points and win 30-20 than score 30 points and lose 40-30. And my framework needs to encompass that. So I think starting with that analytical framework, and then figuring out how do I capture the data to feed that framework, so that I'm always having discussions from data that I know, that I trust. And so that's on the other end of it, getting your sources of truth and making sure those sources of truth are synchronized with the analytical framework that it feeds. And that's what FutureView does in a nutshell, is we identify the sources of truth, HRIS, CRM, your GL system. We make sure that we have a process to synchronize the data from that into a analytical framework at the other end. And we use some interesting things like OLAP tools and some other processes to make that happen.
Now we're getting into the meat of it.
Okay.
No, like that.
It takes me a while. I'm a slow warm up to the meat.
but this is really. So you said, I mean, I should have written it down, but I think I'll remember. You said 3 or 4 things then that really just struck a chord with me. So one is having that baseline and that framework to understand, like, what's the ecosystem that we're operating in, and then building a process of, an area of control, so that we can actually then quantify and continue to work through whatever that, analytics platform is. And then moving through that, like, I think that too many founders are running, hands over their eyes, trying to just push forward without thinking, how is this truly going to impact? And so what you're actually effectively doing is you're creating a single source of truth. You're building a framework so that it's understandable for anyone who needs to interpret the data. And then you're building a process that effectively allows you to check in, make and tweak decisions inside of the business. And then you're putting on a beautiful dashboard that really helps people who aren't necessarily, all about triple bottom line and understanding, the true impact to business.
I want to know what you need do your job. Each person in the company needs a certain amount of information to make good decisions and do their job. And that's what we want to create for them.
And, the more I think about it and the more educated I become, as trying to grow these businesses and trying to impact as many lives as we can and make a real difference, the more I realize that without having true financial controls and without having all of these systems in place that you've defined, everything else becomes pretty redundant. You can't run a business effectively if you don't have the fundamentals down and you're not really planning for the future. And, like I said to you on the previous couple of calls we had, like, I think that it's one of those things that is just such a gap in the market. And I'm seeing a few people coming up, but the technology play that you have, I just think it's really powerful stuff because it makes it really accessible as well to people who otherwise would, and not that your services are so expensive, but I think what it really does is it takes it to a level where anyone can access this information, and businesses that would have otherwise likely failed in year one and year two can get control of those key fundamentals to really drive the business in the right direction.
Oh, that is absolutely the goal. And I feel like it's really worked. And I always say this because we talk to a lot of companies and they're like, well, we're really interested, but we're going to hire a CFO. Okay. I absolutely love when someone's going to hire a CFO, because a CFO comes in and they're going to try to build an infrastructure, and we provide sort of a ready-made infrastructure. So a CFO can, if you think about a CFO, a lot of CFOs fail, and they fail because either A, they're very strategic, but the business is still in way too basic a form for them to apply their strategy. It doesn't really help to have great strategic insights about the future of your market if when the CEO says, how much are we spending on electricity? I have no idea, because we don't close the books every month. So you fail because you're on that wrong end of the spectrum. Or the other side of it is, we're just a mess. We never close the books. We're bringing in a CFO who knows how to get the books closed and everything. And at first that's great because you get some order to things and everybody feels better with structure. But now that same person who is really good at that may not be able to adapt, or may not be able to be perceived as a strategic CFO. Sometimes they can be, but the fact is they've had to be sort of the process-oriented accounting geek for so long, just to show that they were on top of that they've not built the credibility from a strategic standpoint that they might have been able to otherwise. So a CFO who comes in to a company where FutureView is there, I think has a huge advantage, because we've got the structure in place so that you have the numbers, you have the information, and at the same time you can demonstrate your business capability, which is really what you want. The goal of a CFO is not to tick boxes and do audit type stuff. The goal of a CFO is to participate in the business discussion and bring a financial perspective to that discussion. So we really accelerate that a little, I think.
I think definitely, and I've got a few selling points for you as I was listening to you.
I could use them.
Well, no, but I'm just saying, as someone who's gone through this, right, and also as someone who has a consulting practice, that we'd be the foremost experts in process improvement for e-commerce businesses, and so people often look to build these solutions inside. So when I think about a fractional CFO solution versus bringing someone inside, I mean, firstly, if you're not doing 20, 30, 40, 50 million a year, maybe 50 million a year, depending on the business, of course, you need to bring in a full-time CFO realistically at those points. But up until that point, there's the wage of what you're going to pay someone to be full-time. You're probably looking at $200,000-$300,000 a year realistically for someone really good. And so it becomes cost prohibitive. But I would say as well, like, if I'm going to go to a solution like FutureView, you've seen inside of businesses that are at a similar size, that are doing similar things. So you're going to be the experts in it. That's one thing. The second thing is obviously the cost significantly less, and it can be ramped up and ramped down. And when you talk about getting to that level of being 40, 50, 60, whatever million you are in revenue and a team, and you really need those levels of internal control, you're in a beautiful place to continue to leverage the solutions that you built as a foundation to carry on rather than trying to re-engineer the wheel. And so, when I'm looking at the value proposition of FutureView as a solution, to me, it's a no-brainer because, like I said, we've gone through this process and I'm trying to quantify and look at like what's it cost, but what does it actually cost you as a business if you don't have this information and you don't have these levels of control?
Good decisions. I think good decisions have it's the old present value, right? A good decision made earlier is better than a good decision made later. And anybody who's worked for a big company, sometimes you hit your head and you're like, how the heck does this thing work? Because it's just a mess. And I think that's any group of people, right? That organize in a big way, you're going to have a lot of stuff that doesn't seem to go right. But what makes the difference with some of these big giant companies that exist, is that somewhere someone made some really brilliant decisions very early, and they've reaped the ongoing benefit of that decision for decade compounding interest, right? That's as Einstein said, it's the most powerful force. And so getting it, if you're early in the stage and you get good financial information, then that means that every conversation you're having in your business from then on is more informed. And what are you doing with those conversations? You're deciding what direction to go. You're gonna end up at a better place faster. And so I think that's really the key for us. And yeah, just to touch on one thing you said that I think is kind of interesting too, is that I like the fractional CFO concept for smaller businesses for this reason. I've been a CFO. I've come into companies as a CFO. And if I'm a CFO, if you think about how a finance function works, it's a hierarchy, right? It's the old, I spend most of my hours are on that low level, paying the bills, capturing the invoices, recording the transactions to get to the accounting. I spend hopefully a little less time processing that information so that it's ready for analysis. And then I spend my last amount of time analyzing it. Well, that's really that piece takes the least amount of time if all the other pieces are there. So when I see someone at a small business and they have one accountant and they say, now I need a CFO, I'm like, okay, be prepared to hire more people, because the CFO is not going to want to come in and close your books for you. They could, maybe they could. I don't know if I could anymore, but I'm sure I could do the debits and credits if I really had to.
But that's not the value. That's not the intrinsic value that you bring. And it's like an overpriced accounts payable, accounts receivable specialist who's really going to be frustrated and not adding value. So yeah, I mean, to your point, the fractional CFO model, I think, is something that as a construct it's probably the thing that's grown fastest in the last few years that I've, when I jumped in the space that I'm in right now, there was one guy that I knew in the space, and now I'm seeing, people popping up, but in different focuses and different verticals. And I think, the strategic positioning of having a technology and a dashboard around it really, it adds a whole different layer. But I'm just looking at the time and I can't believe we're already virtually at time here. So before I let you go, John, I mean, say someone listening in was interested in FutureView and Foundation and wanted to get in touch, what would be the best way for them to, whether they contact you or they go to your team? What's the best way for them to find out more?
Go to our website, www.futureviewsystems.com. And we have some white papers and you can download. We have, or you just email us and we will give you a call. And the one thing I think I'd just love to say at the end, we've talked about this whole shared, this fractional CFO. It's also kind of a fractional FP&A, because if you think about financial planning and analysis, it really takes all those different skills. You can't just be one person there either. You've got to have technology understanding, finance understanding. We built this with finance in view. And one of the things, because we've got Foundation, which is direct integration, and we've got a platform where 80% of the stuff that 100% of finance functions need has already been built, we can move really fast. So if you're on NetSuite or QuickBooks Online, not only can I get you up and running, but to the time thing, I can get you running very fast. In 7 to 10 business days, you will be going from somewhat disorder somewhat a state of disorder to closing the books and having real analysis and forecasting and budgeting. So that's the hook for us. Is
I mean, that's huge. That's huge. As someone who's gone through this process, we're looking at 4, 5, 6, 8 weeks to get real total understanding and control. So 5 to 7 to 10 days is, if you haven't gone down this process, that's absurd. We were talking before. We unfortunately use Xero, which I know you're adding to your suite of tools that you'll integrate with. But that's amazing. John, seriously, it's always just such a pleasure chatting with you. I feel like I learn so much every time. And, if there's one lesson that anyone can take while they're building their business, going through this is, hopefully it's FutureView, but if it's not, get your books in order and actually have someone at a strategic level, not just a bookkeeper, putting things together. Because at the end of the day, if you're relying on lag metrics, then, you've effectively sealed your fate into what your business is going to look like. Because by the time you want to act, it'll be too late. Absolutely.
100% right. Get the architecture right first, and then build to the plan. Don't do the plumbing and electricity first.
Yeah, no, I liked your analogy. Either you've come up with a great new concept where there's toilets in kitchens, or it's an absolute disaster. So, anyway, John, thank you very much, mate. I really appreciate your time. I know how busy you are.
Yeah, really enjoyed it. Look forward to hear more about your company too as you keep going here. So best of luck.
Well, I'm sure we'll continue to intertwine, and excited to continue to progress the conversation.
Thank you very much.